Market observations for Bendigo, Victoria. Let's take a deep dive here into this market. Is it the right time to potentially be investing there for capital growth and also cash flow? Before I dive into the content, I wanted to invite you to something that we've been working on here behind the scenes. For many hundreds of hours, it's something that has been a absolute focus for what we've been doing in private advisory now for some time. And we call it the even playing field system. It is almost 25 hours of TV quality educational content to teach us property investing in Australia. There is literally nothing left off the table. It is our life's work here in Ripehouse Advisory. All of the trade secrets, how to find off markets, how to be a boardless investor, how to negotiate, how to do research and locate locations like we do in private advisory. We spend 4 hours in one module going as deep as we possibly can on teaching all the concepts, the data and the research that we would touch the surface of here today. And I mean, we go into a lot of detail in these market observations. In the course, there is nothing left off the table. We call it the even playing field system because we are trying to do exactly that. Open source all of our education, our learnings, our strategies, our processes, so we can empower you as a property investor and even this playing field. We want to allow you to hold spruikers, other less sophisticated buyers agent industry professionals to account. Call them out because you have more knowledge than them. We all need to own our process of empowerment and education. We can then apply that from purchase to purchase and we can pass that knowledge down to future generations. That's what it's all about. So if you'd like more details about the even playing field system from Ripehouse Academy, head to the link here now or the link in the description below. I look forward to seeing you over there in a moment. So let's dive right in here quickly to Bendigo in Victoria. As you know, property investment is a science. We need to approach it this way. In this analysis today, we're doing two types of analysis. One of them is our 3 to 5 year model. It's concerned about the when. Is this an area worthy of our attention? What is the predicted opportunity for this area over the midterm? And then when we get that right, we've got an area with good opportunity. We need to determine, is it the right time to be buying there? Whenever you see researchers, education content, basic education or course material out there talking about one model, one number, one score, it is too simplistic. It's leading you up a garden path and it's putting you in front of many other less sophisticated investors like them. We need to really pull this up by the bootstraps. This industry needs to be best practice. This is an arms race. If you are second into a market, you are last. Someone has got there before you with better modeling, better data, better research. One day before, they've got the best deal. It's as simple as that. So we need to take a 2-model approach where we have a where, a 3 to 5 year model, and we have a when, a 1 year model where the algorithms and the data is telling us that this is the right time to be buying in this market. The buying window is open. So let's go into that analysis now and keep that in mind. Overall, the where, the longer term model, the market opportunity. This is Bendigo, regional Victoria, on the new train line extension, a really nice, buoyant regional economy. We've had some extremely strong capital growth there in the last 3 or 4 years. We've bought over 100 properties there for clients going back to 2019, 2020, and then we exited. We left. We've moved on far and wide to other growth markets where the buying window has been very strong. But let's do an analysis now. Is it the right time to buy there once again? For a regional, this is very good employment diversity. Healthcare, retail and trade, education and training. I love healthcare. I love education and training as large employers. Got no issues here for Bendigo. Income growth is very strong. For a regional centre, this is off the charts. Excellent income growth. Commute time, remember, a lot of people live in these regionals. They might travel an hour to work. Most of them obviously live and work in the local area, but some of them are traveling to, regional or agricultural or mining or construction industrial employers all around the catchment area, even back into Melbourne. So overall, this commute time, not an issue for me. Unemployment, very low levels. Extremely buoyant and positive employment data coming out of Bendigo. New projects on the horizon, extremely good for a regional, right? We are some of the highest new project data here across the globe, across the country. Local services, we have all the big ticket items. I love seeing a Bunnings in these regional centres, and we do have all of these in close proximity, so very good location and proximity scores. Population, up almost over 1.5 or over 1.5% population growth. Very good once again for a regional centre. Population growth that is slowing slightly, but it is still at high levels. Versus supply, we're in a balanced market, and very high future predicted population growth. That's an internal Ripehouse Advisory population forecast figure that is COVID checked. So overall, very strong population data. Now, like all of these regional areas, we have had, you have a very varied mix. Some suburbs are established, have very low new supply, and you might have a whole suburb that is created over a period of 3 to 5 years. So we have a lot of variance here with new supply entering to the market. We definitely don't want to be caught here. We don't want to be buying further out than where there is vacant land. You know, so if we're buying on the outskirts of a place like Bendigo and there is all of these vacant land or paddocks that can be subdivided between us and the CBD, it's a big red flag. So there are suburbs here, you know, on the periphery that have 15% or more, 10% or more new supply entering them. But when you are focused on the core CBD area, you have supply of under 2%. That's where we need to be focusing our attention here, guys. So let's stay away from the periphery, big red flags in some of those. Overall, we're extremely strong in our 3 to 5 year modelling for Bendigo. Big ticks across the board. Right, good new projects, good employment health, low new home construction in those suburbs close into the CBD. We have to stick to established areas. It's almost off the charts for regionals. Excellent 3 to 5 year predictive modelling or growth scoring for this one, okay? Remember, some of these data points are more important than others. There are many more data points here that we assess behind the scenes than what is shown here. This is designed to be an overview and introduction. I think we do a great job of providing value to you, but we're just scratching the surface. We've got, you know, if this is a 30-minute video, we go 4 hours of the total, almost 25 hours in the even playing field system on this predictive analysis alone. No stone is turned unturned. All of our learnings from data science and actuaries in the business, economists in the business, nothing is left off the table. We reveal all of our trade secrets and open source our knowledge. And we have to, because we are trying to even the playing field in this industry. No more basic education courses for Australian property investors. We need to level up here, guys. So let's go into the when. Is it the right time to be buying in this market? We've got extremely strong growth fundamentals at a larger 3 to 5 year model. Is it the right time to be buying here? Let's have a look at this. Extremely low days on market. It is starting to trend upwards slightly. Let's see if that's a cause of concern. Number of immediate sales, well, we've definitely had the heat dissipate from this market month after month after month after month, but we've come from extremely, I haven't seen this level of immediate sales ever before in Australia. So this has been an extremely heated market going into March of this year, and then the heat has dissipated the last few months. The stock is creeping upwards here, guys. Slight correction recently, but the stock is definitely increasing. Properties are sticking around a little while in the market, and the days of supply is still very stable. So while stock is increasing, the turnover is increasing too, because the days of supply is still very low and not really trending upwards. So we might still have some heat there left in this market. Asking price has definitely stabilised over the last 3 or so months. Discounting has come from very high levels, now down back to earth at around 5%. Still quite some heat in this market. The sales price has been, a little bit confused here for the last year or so. It's popped back up again, and it is a high point. I can see on the buy side here, just at a really high level, there might be another 3 to 6 months left in this market in the current buying window. But we are really coming up here towards the top, and it's starting to become risky to try and chase that final few percentage points in the next buying window, or in this current buying window. Let's see if that's confirmed with the rental side. Very tight vacancy rental market, very tight rental market, days on rental market here in Bendigo. Vacancy rates are holding at around that 1.5%. That's actually quite high nationally, guys. So there's probably not really having too many issues in building new homes and construction, as we can see through that supply entering the market. This might be the case where you have suburbs in close to the CBD. I call it the Golden Triangle in Bendigo, where you have the hospital, the uni and the CBD. You've probably got very low vacancy rates in those suburbs, but in the new housing estates on the periphery, vacancy rates are a little bit higher. So overall, as a city, we are over 1.5% here. So we don't have a huge amount of rental pressure driving this market. So for me, on the buy side, we might have 3 to 6 months left in this current buying window. But on the rental side of the equation, the steam has well and truly left this market. So I'm really not seeing an entry point here, guys. It's, we don't want to be buying into a market just to have that final little bit of a final push and then a slowdown phase. I prefer to be buying at the bottom before hockey stick growth. And overall, houses versus units, overall yields are now at a low point in the cycle. Back in 2019, 2020, 2021, 2020, I think we stopped buying this market. We were at 5.5%, 5% yield, okay, in this market. You can see how it's dropped off. So what we've done here, guys, this is looking at our 3 to 5 and 1 year models. We stack 2 algorithms on top of each other, and we then know what are the most important alpha factors, data signals that we use to predict growth. We're just scratching the surface here. If you would like to learn more about this or the end-to-end knowledge that we have around property investing in general, strategy, advanced strategies like commercials, rooming houses, unit blocks, how to strategize and structure finance and portfolio planning, how to do renovations cost effectively across the country and maximize our ROI, almost 25 and many, many more modules, all of our trade secrets revealed from Private Advisory. This is almost 25 hours of content, TV production quality. Nothing is left off the table. Like Elon Musk did with Tesla, we're open sourcing all of our knowledge for the betterment of the industry, and we call it the even playing field system for a reason. We go into 4 hours of detail about how to target Australia's strongest growth areas. I love to get your feedback on that. If you'd like more details, head to the link here now and in the description below. If you like this content, it means a lot to us if you would mention a word of encouragement in the chat bar, the comment bar below. Like the video, please, and subscribe to the channel. Make sure you hit the bell icon so you are the first to be notified of any new research that we do release. Thank you.